Is the BRRRR strategy actually the fastest way to build wealth in real estate? Or is it just too risky in today's market? Let's break down the real pros and cons of the BRRRR strategy so that you can decide for yourself. And for anyone who's new to the BRRRR strategy, it stands for buy, rehab, rent, refinance, and repeat. So you basically buy a property that needs work, you fix it up, you then rent it out, you refinance so you can pull out your money, and then you go do it again. I have another video breaking down the BRRRR strategy and what it actually is and like a real case study in depth. So if you need a refresher, I'll point you to that video. But in this video, let's break down the pros and the cons of doing the BRRRR strategy. The first pro to the BRRRR strategy is you can recycle your capital and do more deals. I just had a recent deal where I left a total of $11,000 into the deal after doing the BRRRR strategy. Now, if I bought that using a traditional 20% down loan, I would have had $30,000 to $40,000 in the deal. So just with this one deal alone, I'm able to do 4 times the amount of deals by using the BRRRR strategy. The second pro is you create forced appreciation. So even though in this example, I was out of pocket $11,000, I already have about $50,000 of built-in equity in the property. And of course, that's because I bought it right, I renovated it right, and then the values came high when I went to go refinance. The third pro, and I kind of mentioned this before, but it is a scalable strategy because it doesn't require a ton of money to be left in the deal. Yes, it does require some money on the front end. You could just use an investor and then you don't really need to have much money at all. But if you are using your own money, it's something where you can recycle it and that allows you to scale quickly. Now, the next pro, which is really underrated, is that your rental properties will have less monthly maintenance than a property that isn't completely renovated. Now, it sounds really obvious, but I've really seen this firsthand with my portfolio. I bought properties where I've done the BRRRR strategy, and I've done properties where I just bought them and put 20 to 30% down. And I can tell you for a fact, the properties that I do the BRRRR strategy on, where everything is completely renovated, those properties require a lot less maintenance, which really boosts my returns. Okay, so those are some of the pros about the BRRRR strategy. Let's talk about the cons, because just to be transparent, it is not all rainbows and sunshines. The first con to the BRRRR strategy is renovation risk. So whenever you have a renovation budget and you're doing the BRRRR strategy, you need to really stick to that budget. But of course, when you're renovating a property, there are oftentimes unforeseen things that can happen. So if you don't stick to your budget and you run over, you might have to bring extra money to the table. Now, if you build your budget properly and you build in overages, this won't really be a problem, but you do have to be aware and making sure that you're running your property on a tight budget. The second con, and I'd say this is probably the biggest one that is pretty outside of your control, is the appraisal risk. So I'll give you an example of what happened to me. I had a property that I did the BRRRR strategy on, and when I went to go refinance, I was expecting the appraiser to come back and say, Bailey, your property is worth $130,000. I was so confident that that was the amount. I actually thought it was gonna be more, but I've learned after doing a couple of these that I need to lower my expectations. I said, you know what, $130,000, I'd be fine with that. I really think it's in the 140 range, but I'll just say 130. Appraiser came back at 115, and I was so shocked. It was crazy. But what ended up happening, because the appraisal came in lower, is I bring more money to closing to actually refinance that property. So if you have 10 properties going on at once and they each come in $15,000 lower than expected and you go to refinance, you're gonna have to bring a lot more money to the table. That's why, number one, I only like to do 1 to 2 projects at a time until I can refinance. That way I can manage my cash a little bit better. And I also like to now lower my expectations. I run my own comps, but then I kind of lower it by 10% because that's what I've seen these appraisers come in at. The third con is there's a lot of moving parts with the BRRRR strategy. You have to find the deal that's a great buy. Then you have to renovate it right. Then you have to rent it. Then you have to refinance. So there are a lot of different pieces. Now, if it was easy, everybody would be doing it, right? So it definitely is a strategy that takes different skills, like finding good deals, renovating properties. You don't have to be the one doing it, but you need to know who to hire, what to pay them, what supplies to get, all that good stuff. And then renting it out, making sure you have a solid renter in place. I do the midterm rental strategy mainly. You can do whatever you want. And then making sure that you refinance the property and get the best terms possible. and then of course, repeat and do it over and over again. So those are my pros and cons of the BRRRR strategy. I personally think that the pros completely outweigh the cons. But if you're somebody who has a limited amount of money and you want to just recycle your capital, then I think the BRRRR strategy is an absolute no-brainer. If you guys would like some help implementing the BRRRR strategy, you can go ahead and book a call with me down below. If you have other questions, feel free to drop them in the comments below, and I will see you guys in the next video. Peace.